Hey guys, this is Paul Paquin here at Golden Financial Services. Today we're going to look at 4 debt relief options in 2019, and we're going to be using the debt calculator tool. You can see here at the bottom it's www.goldenfs.org/debt-calculator. Okay, that's the tool that we're going to be using for today's demonstration, and we're going to be looking at an example which is going to consist of $50,000 worth of credit card debt. The first example that we're going to look at is on your own, and what that's referring to is if you are paying only minimum payments. The biggest problem that we see clients have at Golden Financial Services, they will call us, and basically one of the first things that they tell us about is the fact that I'm paying all this money every month and my credit card balances just won't go down. Why is that? And what can I do about it? And the sad truth is, in this example, we're using $25,000 worth of credit card debt, but that's actually a very common example. 25%. This day and age, it's not even excessive. It's almost average. Now, it's a little bit higher than average, but if you have maxed out credit cards, you've probably had your interest rate rise on you. Your creditors probably increased your interest rate because keep in mind, if you have maxed out credit cards, your credit utilization ratio is being negatively affected, and that will lower your credit score, and creditors will increase interest rates, which again is not something you authorized, but it's what credit card companies are able to do by using their own little loopholes in the law. So in this case, $50,000 of credit card debt, if you're paying only minimum payments will come out to roughly $1,200 per month. Minimum payments are on average between 2.5% to 2.7% of what your total debt is, which comes out to, in this case, roughly $1,200 per month. At $1,200 per month, you're going to end up paying $117,874 in the end. So it's going to take you 8 years and 3 months of paying every single month. You're going to be paying $1,200 per month. And after 8 years and 3 months, it's going to cost you a total of $117,874. If you have a calculator, or I'll just give you the numbers, but based on $117,874, subtract $50,000, which is what you really owe, and you'll find out in this case that you ended up paying $67,874 in interest just to pay off this $50,000 in debt. So you end up paying more interest than the amount you even owe, which is absurd. Now, if you can only afford to pay minimum payments, the first option we're going to look at is, consumer credit counseling. Consumer credit counseling, we're looking at the same $50,000 of debt, but what's going to happen is your interest rate is going to get knocked all the way down to either 8, 10, or 12% is what the average is. You can expect to see your interest rate get knocked down to somewhere in that ballpark. In our example, we're going to assume you were able to get the 25% knocked down to 8%. What's not going to change much is the monthly payment. Your monthly payment is going to stay around the same as when you're paying minimum payments on your own. With consumer credit counseling, it stays the same. But since your interest rate goes to 8% or 10% or even 12%, where you're going to end up saving money is in the total that you end up paying, which is only going to come out to $69,230.77. So you're still paying more than $50,000, but the interest is under $20,000 that you're paying. And because of that, you're able to get out of debt in 4 years and 9 months, which is much better than 8 years and 3 months. So at the very least, if you can only afford minimum payments, you should at least consider consumer credit counseling. This is the only program where your creditors will get paid every month, so your credit score will stay just as high as it is today in most cases. Sometimes you can see an improvement in your credit score because if you're behind on monthly payments, once you get approved for this type of program, your payments will go from delinquent and they will get re-aged to say that they're now current. And that can help improve your credit score. So that's with consumer credit counseling. Next, we're going to look at hardship programs. These two programs are for people who can't stay current on their payments. So the next plan is debt settlement. Let me get my pen here. Okay. With debt settlement, $50,000 of debt can be completely paid off. You'll be debt-free within 3 years at a monthly payment of $850.07 per month. That monthly payment includes all fees. So on average, with debt settlement, your debt will get settled at around 40%. And then the debt settlement company fees will come out to roughly 15 to 20% of what your total debt is. So in total, you end up paying 60 to 70% of what you owe. Now, some debt settlement companies will charge more, where you will end up paying roughly 75 to 80% of what you owe, but you're still paying less than what you owe. The downside with debt settlement is that you're going to end up with collection accounts and late marks on your credit. In some cases, a reputable company will work in the negotiations to get your creditor to agree to remove the negative mark from your credit upon getting paid the settlement. But that's not always guaranteed, and often creditors won't even agree to that. So before you settle your debt, there's actually a less expensive option, and surprisingly, it works extremely effective. And the reason why is because once a credit card company writes off your debt, they get reimbursed through a tax credit. They show a loss on their profit and loss statement. The banks will write off the debt and then get reimbursed by getting a credit. That's how it works. When you take out a loan at the bank, before you even fall behind on payments, they transfer that loan into an asset. And when there's an assets, you're able to show what's called depreciating value on an asset, where the banks will assume a certain percentage of clients will go default on monthly payments, and they are able to actually benefit from clients when they default on payments. Which, if you've ever wondered, why won't the bank work with me any more than they're working with me? Do they want me to fall behind on payments? Sometimes you have to question, do they even really care? Well, besides the fact that they also, besides getting reimbursed through tax credit, there's a thing called banking insurance. Just like you drive a car and have car insurance, if you get in a car accident, you only have to pay a small deductible, and the insurance covers everything. Banks also have banking insurance, and a bank will sell your account to a debt collection company. When they do that, they usually email a spreadsheet with hundreds of names and basic information on it to the debt collection company that offers them the most, which is usually only 10 to 20% of what the debt is. That's what these debt collection companies pay for the debt. As you can imagine, there's all types of mistakes that occur at that point. Unauthorized fees get added in, collection fees, and things of that nature. This next option is going to challenge the debt collection company. It's called debt validation. And what debt validation is doing is it's requesting what the federal laws require the debt collection companies to maintain. For example, if you request in writing that the debt collection company provide you proof that the debt is valid, and they need to provide you the original agreement that you signed when you first signed up for that credit card before it was written off, they need to provide you the information, accurate information on stuff like when the statute of limitations on the debt is, how they came up with that date, when the account was opened, when the account was transferred to the collection agency, the full account number with the original creditor. So there's a long list of items that the debt collection company needs to have accurate information on, and you can request, as part of the debt validation laws allow, you are legally allowed to request that the debt collection company produce this information and produce the required documentation, including their license to collect on debt in a particular state, as we mentioned, including the original agreement that you signed, including a full breakdown of every monthly statement going back since day one when you open the account. And I could go on and on about this, but the bottom line is federal laws require debt collection companies to maintain accurate and complete documentation, and often they can't produce this information when challenged with debt validation. In Golden Financial's experience, 9 out of 10 cases are a success. We don't have, if you look, you won't find any complaints in the last 3 years on Golden Financial, and it's due to the success rate of this program. So it's hard to imagine, but in our experience, 9 out of 10 cases can't be proven to be valid, where the debt is invalidated and proven legally uncollectible. A legally uncollectible debt you don't have to pay. So at the end of the day, you have $50,000 of debt, and you only end up paying a total cost of $22,854 to resolve it all. There's no extra interest or fees. That's everything. $22,854. If one of your debts isn't resolved, you are not charged and you are fully refunded on that one particular account. With the refund, you could then get the debt settled as a last case option. But before you settle the debt, use debt validation, because instead of paying $30,602, you could end up paying $22,854. And in many cases, the debt comes off your credit entirely, and your monthly payment is only going to be $634 for 36 months, versus with debt settlement, it would be $850. So you can see the clear benefit. Additionally, debt validation includes credit repair and a money-back guarantee, which debt settlement does not include. At Golden Financial, you can access these different programs, and you can also get a free consultation at 866-376-9846. And if you'd like to try this debt calculator on your own, you could go to goldenfs.org/debt-calculator/ and you can try it. If you'd like to learn about your state's debt relief options, you could go to goldenfs.org and just select your state, and then all of your state's options will appear. And that's it for today, folks.